Hello and welcome back to Dukascopy TV. Ron William is back in the studio for a market overview from the technical side of things. Ron, welcome back.
Hi, happy Friday. Good to be here.
Happy Friday, yes, let's make it a good one. Lovely to see you as always.
Thank you.
We're looking at what's happening from the technical side of things. There's quite a lot of headlines at the moment. Busy week, obviously. We've had the meeting from the FOMC. How has that changed things in your point of view, would you say?
Well, the big event headline, of course, was the slight hawkishness or increased hawkishness from the Fed policy in terms of rates. And of course, that has a direct effect on long-term interest rates and rates in general. But one of the interesting points I wanted to feed back into that headline is the technical picture itself. And what that suggests is a potential understatement in the hawkishness from the Fed, with the technical picture actually suggesting higher rates into the 3% mark, which is what we have here on the headline. Now, if I just take a step back, we had a recent bullish reversal signal on US 10-year rates, that bullish to mark exhaustion signal just there some time ago. But we've been range bound since. A key trigger level is 280, and thereafter we can then see higher levels. Now, from a big picture perspective, it's also important for viewers to kind of keep in mind that this entire move is a bullish cyclical recovery from roughly a 30-plus year downtrend in rates. So this is a big kind of seismic move that we're seeing on rates.
Okay, well, as we see, it's all relative, it's all linked. And if we follow on that note, what about looking at the equities? There's been a bit of negativity on the equities front, given the economic situation. But what is your outlook moving forward, Ron?
Sure. So with the potential indication of challenging economic expectations ahead, this has been added further headwind to the stock market of late. Now, of course, we've had a little bit of a choppy 2 steps forward, 1 step back price action in the stock market, so it's been fairly volatile in the short term. But what is interesting is that the last few days of setbacks that we've seen, more specifically based upon the same indicator that I look at, the Tom DeMark indicator, suggests a very strong overbought condition in the market. We've seen the signal occur over the last few weeks and months, but this one is that much more stronger. One thing I should highlight is a key risk level for this indicator that will neutralize the signal is a level at 1932. So if the market were to hold on a sustainable basis above 1932, then the bulls just take control again and push the market even higher. But that withstanding, if the market does continue to correct, the key downside trigger levels are just highlighted there in green, 1646. And then if we do break that, the next kind of big level would be 1415. These are the key levels to keep an eye on. And just the last point I'd make on more of a big picture perspective, and that's the historical chart in the top left-hand corner. And that's just showing the stock market history from Y2K, the beginning of the century. And it shows the same signal, the DeMark signal, but on a macro kind of historical level, punctuating some of the key crisis peaks that we've seen in 2007 ahead of the great financial crisis, and then before that, the tech bubble. Now, all it suggests is a little bit of potential deja vu, but the magnitude of a potential correction or a bear market in the stocks, we would still need to wait for.
Slight sense of familiarity there, it seems. A little bit of a warning, but if we turn our attention also to gold, that's something which is quite interesting. You've got a chart for us as well for this, and we've seen quite a lot of price action with gold as well, haven't we? Yeah,
I mean, feeding through on your point about the charts and the markets being linked, certainly further unwinding risk appetite that we're seeing in the stock market and various other risk proxies is likely to be positive for gold, with renewed safe haven flows coming back into the yellow metal. However, having said that, on a short-term technical basis, gold is looking a little bit overstretched after its $200 mini recovery from the base lows. That is also likely to unwind from a key resistance level at 1420. So this is maybe just the interim likelihood that we'd like to see further unwinding. But my view is that once that is over, once the market breaks above 1420, the next level is 1590 and even higher above that. So this is the view to keep in mind for gold, further upside over the medium term.
It does seem to be. We've had that flight to quality, and obviously gold and the different other safe havens become very interesting because we have this situation ongoing in the Ukraine as well. The geopolitical tension seems to be affecting things, and there is concern about how it will impact commodity prices. One thing which maybe actually have quite an impact on is oil going forward, don't you think?
Absolutely, and it's a favourite of mine, partly because it hasn't done much for a long time. And what that means in trading, investment world is the likely of a breakout. Whenever you have extreme periods of low volatility, the opposite is then likely at some point in time. And of course, oil is synonymous with a whole bunch of event risk, but very specifically geopolitical risk. Now, we haven't seen that much geopolitical risk premium priced in to oil, but if we look at it just from a technical perspective, there is still a growing risk for a breakout from this 3-year range, this converging range. And this is just something I look at on a technical basis, but whenever there's increased event risk, like you mentioned, what is happening at the moment with the Ukraine situation and maybe what might happen thereafter, it's one to keep in mind. Now, the key levels that I would suggest the audience just keep an eye on would be the key levels at $108.21 and $86.73. These are the key breakout levels on either side.
Well, you certainly have given us lots to think about there, Ron. Thank you so much for coming in and sharing your insights with us today. It's been a pleasure.
Thank you very much.
Thank you. Okay, well, that's all for Ron and myself for the moment, but make sure you keep clicking back to Dukascopy TV for many more exclusive interviews. Goodbye for now.